time. Thanks for tuning in to Bloomberg Quint. An expert panel set up by SEBI has recommended that the market regulator allow Indian companies to list directly on overseas exchanges and foreign firms directly on Indian bourses. Currently, Indian companies can list their shares through depository receipts abroad, and that too only if they are listed in India. Foreign companies need to rely on Indian depository receipts. The new framework would make listing easier, but would also allow it only on specified stock exchanges in permissible jurisdictions. Let's discuss this proposal with two members of the high-level panel, Mr. Cyril Shroff and Mr. Ranu Vohra, who join us right now on the phone line. Good having you, gentlemen. Thanks so much for joining in. Ranu, let me start off with you. You reckon there is enough appetite for such a move to kickstart immediately, and what is the feedback that you're getting from the people that you would have spoken to?
So I think very clearly, it is time where Indian companies in newer emerging areas, specifically digital, internet, technology, they have global aspirations, they have scale they want to reach, and they have to access the lowest cost of capital. So with all of those requirements and to compete effectively in a global market, we thought it would be a good rationale economically for such companies to consider getting listed overseas in permissible jurisdictions. And these permissible jurisdictions have been chosen thoughtfully with a reason. They have, of course, high-quality capital market infrastructures. They have good KYC and email practices, which are justifiable, and also these are markets where there is a pool of investors who have an understanding of some of the sectors. A classic point would be, for instance, markets in the U.S. where as many as 91 Chinese companies have listed between 2013 and 2018 and raised in excess of $40 billion in primary issuances. So it's a great opportunity for Indian companies to go global. I think the second part which this committee is considered is to see if the Indian capital markets, as they evolve, become attractive for some of the firms in the area, in certain industries, to come and list here. Because the Indian capital markets also are today amongst the top 10. So it is a logical part in their evolution that some of the companies outside India can come in and list here. This would be, in some manner, a big change from the GDR, ADR, and IDR regime which the country currently has.
Yeah, it would be. Mr. Shroff, your thoughts, and SEBI is one party to this development. What about the others? I mean, would you believe that all of them would be on board, or could there be stumbling blocks? I believe some of these matters have been referred to the tax department and the Reserve Bank of India as well.
That's right. So I think you have to look at this as a start of a regulatory journey. And the possibilities that open up with direct listing of shares both ways really takes the intellectual basis of opening up the capital markets to another level. As Ranu mentioned, it has in the past been essentially around depository receipts, whether they be ADR, GDR outside or IDRs over here. And this crosses into the next threshold of direct listing of shares, and consequently opens up a much wider avenue of potential investors, and is also a hallmark of quality for the standard of regulation in the market. So once this finally goes ahead with all the bells and whistles being tied up, it would be huge in terms of the natural evolution of a big capital markets like us. So that's the first point. The second, I think, is the agencies other than SEBI that would need to sort of support this. So obviously SEBI has taken the initiative, and it is with strong political will behind it for India's markets to be capital markets to be more aligned with global markets. we believe that there is strong support from the system, whether it's for changing company law, foreign exchange regulations, or for tax. But all these other agencies will need to look at it as well. But I think the committee is confident that as this is processed through the policy and the regulatory system, that these changes will come because India wants it to happen.
You don't see, Mr. Shroff, any kind of stumbling blocks? I mean, just a brief chat that I had with a few market participants before we came into this conversation. I mean, we got the access to this report about half an hour ago, and many seem to believe that, these issues of beneficial ownership that have cropped up for the ADRs, GDRs in the past, or the tax treatment, and how the regulators thus far have been reluctant about, flight of capital outside or the business going out to overseas exchanges as opposed to staying in India, could be potential stumbling blocks. Your thoughts here, Mr. Shroff?
No, on the contrary, this makes it more transparent because in relative terms, in a depository receipt kind of structure, it may be possible to, when it is less transparent, this is very transparent.
Okay.
You know exactly who the owner is.
Okay, interesting. Ranu, you reckon there could be immediate appetite, or this is, as Mr. Shroff started off saying, that the start of a development? I mean, I understand that the startup ecosystem could get a boost, but what are your thoughts on what kind of companies start off? Will this be a big bang move at the initial setup itself, or will this take shape and form over a period of time?
I think you will find an accelerated effort. It is led by two things. One is an overall increase in size and maturity of these companies. So over a period of time, today we have probably close to about 100 companies which have a value in excess of $100 million in the ecosystem. So this is not as much, in my mind, a startup effort as it is about high-quality, mature, critical mass companies today going into the international markets and seeking the highest quality, asset management firms to invest in them. And these markets, as you are aware, are of course large markets with their own ecosystems. So one is very clear that these companies have to be relevant in that ecosystem and have to comply with the demand-supply requirement in that specific market, whether it is an NYSE or NASDAQ or London Stock Exchange or Tokyo Stock Exchange. So there is maturity, there is size, there is scale, and more importantly, a lot of these are led by entrepreneurs who have a global vision. So I think the government and the regulators are in some manner, just progressing along the ease of doing business philosophy and making it relatively simpler for such companies to compete at a global level.
Interesting. Ranu, just a couple of foreign brokerages that I had a chance to speak to just before we came in for the discussion seem to also believe that, one, not necessarily the reason why this would have happened, because the reasons are far larger than a particular set of investors, but does this kind of broaden the markets from a hedge fund perspective as well, not having to register in India, being able to trade into these companies, long, short, etc., on a global exchange once they are listed without thinking of coming into the jurisdiction of the Indian exchanges and so on and so forth? Do you think that's a parameter too that gets impacted?
I think that would be a very big positive. So far, such funds have had exposure only to depositories receipts and which are not fully traded or are not liquid enough. I think here is an opportunity for them to get direct exposure to Indian consumption, to the large India market, without actually having to as much kind of come into the Indian market. They're essentially taking this exposure on the overseas markets, which they're a lot more comfortable in. All of a sudden, this magnifies the amount of capital availability and trading possibilities in these companies several times.
Okay. Final thoughts, Mr. Shroff. I'm sure when the committee is Sorry. Yeah, please finish your point.
Yeah, one more thought. I think what it does is that it sets the stage eventually for dual listing. So that's the long-term future.
Yeah, take on board that point completely. Just one final thought, because I'm sure you guys have a busy evening ahead of you. I read in the release that has come out that the committee met about 4 times, multiple other deliberations. You guys would have thought of some bit of timelines by which you believe that this will take definite shape and form. All the regulators, I also heard you say that there is enough political will behind this as well. Any kind of timelines by which you believe this could become a reality, Mr. Shroff?
I I think it's hard to predict the timeline, but it's possible to assess the strength of the political will. So if it were not an election year next year, and there was a normal budget, I would have said about 3 to 5 months. But if you kind of take into account the uncertainty that could result from politics, I would give it a little longer. Okay. But I don't want to put a number on it because it's hard to tell. I can only tell you that there is a level of urgency to get this done.
Fair call.
Do you agree with that?
Yes, I would fully agree. I think it has been it's already available for public to give their feedback, and the moment that feedback is there, I'm sure the regulators are and a lot of thought in terms of next few steps with the regulators has already been taken into account. So hopefully that will reduce the time it would have taken in normal course. Okay. Gentlemen, I'm sure you have a busy evening ahead of you, so leave it at that. Thank you so much for taking the time out and giving us this quick synopsis. Really appreciate your time.
Thank you.
Well, that's the view from two members of the high-level committee, high-level panel, if you will, who deliberated on this issue and have come out with their recommendations. You can read the story on BloombergQuint.com as well. Thanks so much for watching this broadcast.